Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LINK REIT interim report. LINK REIT provides a diverse range of businesses and services through its property portfolio, including retail facilities, car parks, offices, logistics, assets, asset management, portfolio management, capital management. These services span across multiple regions, including Hong Kong, mainland China, Australia, Singapore, and the UK. The stock price of LINK REIT has experienced a modest increase over the past year. According to various sources, the trust's shares have risen by 3.2% to 3.36% over the 365-day period. This growth is lower than that of the Hong Kong retail REITs industry, which returned 15.1% during the same time frame. The underperformance suggests that LINK REIT has not seen a significant surge in its stock price. The primary drivers of revenue growth or decline can be summarized into three key categories. Revenue growth is primarily driven by high occupancy rates, strong rental reversion, and tenant sales growth. The logistics portfolio's 96.6% occupancy rate and retail portfolio's 16.3% rental reversion in Australia have contributed significantly to revenue growth. Additionally, the Hong Kong retail and office properties saw a 50% increase in revenue, reaching $929 million. On the other hand, revenue decline is primarily driven by negative rental reversion rates and macroeconomic conditions. The negative rental reversion rate of -6.4% and muted economic sentiment in China's mainland have led to a decline in revenue. Furthermore, Hong Kong retail and office properties saw a decrease in revenue by $135 million. Mixed or neutral drivers include lease expiry profiles that can impact both revenue growth and decline, as well as changes in rental income from hourly car parks and net property income due to fair value adjustments. The company's financial performance indicates a positive trend in operating cash flow, with a significant increase from $421 million to $514 million over two consecutive periods. It suggests that the company is generating substantial and growing amounts of cash from its core operations. This increase of $720 million demonstrates a notable improvement in the company's ability to generate positive operating cash flow, indicating a strong financial position. The company's debt level and interest expenses have undergone significant changes. Notably, total liabilities increased by 34.6% from $67,862 to $91,724, while borrowings rose by 44.8%. However, the overall total debt only saw a minor increase of 3%, from $49.659 million to $51.254 million. On the other hand, interest expenses have decreased substantially, with a decline of 37% in 2025 compared to 2024. Specifically, interest expenses on borrowings dropped from $974 million to $152 million. This reduction in interest expenses is a positive development for the company, indicating improved financial management and reduced costs. Management is optimistic about the company's outlook, citing encouraging signs for recovery in the Hong Kong retail sector. They are confident in the long-term prospects due to structural drivers and plan to diversify their tenant mix and invest in asset enhancement projects. While they anticipate a slight worsening of operating conditions in the short term, they expect a gradual recovery mid to long term. That concludes the financial summary for LINK REIT. Feel free to comment below, and I will be happy to answer them when possible.